Expanded premium tax credits under the Inflation Reduction Act and American Rescue Plan are set to expire at the end of 2025. Or are they? Big news is brewing in Washington, with Congress currently debating whether to extend those enhanced premium subsidies offered under the Inflation Reduction Act and American Rescue Plan Act that could impact millions of Americans who utilize the marketplace for insurance. Congress is actually currently debating whether or not to extend those enhanced premium tax credits. And if they don't, premiums will increase, coverage could drop, or possibly both. So let us know your thoughts in the comments below. In today's video, we'll discuss what's happening and what the possible impacts are if Congress chooses not to act. Stay tuned. First, a little background and clarification. So, the marketplace is where individuals who do not have insurance offered through their employer or some other private or government option can choose to purchase insurance. This is also known as Obamacare or ACA plans, Affordable Care Act plans. Now, individuals who qualify may be eligible for premium tax credits, which is basically a tax credit paid up front reflected in a much lower monthly premium. So first, I need to say that these tax credits are not going away. However, under the Inflation Reduction Act, as well as the American Rescue Plan Act, these premium tax credits were expanded, making them available to people who were ineligible for, and making them much larger than they had been before. These are the expanded premium tax credits that are set to expire at the end of 2025. Because of these expanded premium tax credits, enrollment in marketplace plans surged, which was extremely helpful to the general population. It allowed for a more diverse population enrolled in marketplace plans, which could further reduce the monthly premiums. Unfortunately, reversing this means a vicious cycle of premium increases, and we will talk about that momentarily. But for right now, what you really do need to know is that those basic premium tax credits are still staying in place. The ones in question are the enhanced premium tax credits. So what happens if Congress fails to act? Well, first and foremost, unfortunately, the obvious is that those premiums would increase dramatically. Some people could see increases up to 75%. However, the average individual is expected to see a premium increase of about 18%. Also, your out-of-pocket costs would likely increase quite significantly, possibly even doubling. And more problematically, many people will go uninsured completely. It's estimated that about 2.2 million people would just lose out on coverage entirely. So insurers, hospitals, and states are sounding alarms. People in businesses and states with many ACA enrollees would be especially hurt. And with open enrollment around the corner, you can be prepared for some sticker shock. So what's happening to mitigate these effects? Well, surprisingly, it looks like there is some bipartisan support to possibly extend these enhanced premium tax credits. Well, in the House, there's a piece of legislation led by Republicans that would extend these enhanced premium subsidies for 1 year. Senate Republicans are also preparing legislation, particularly through the Senate Finance Committee, that would extend these credits, but with reforms. Some proposals would cap eligibility or limit subsidies for certain plans. Democrats are also pushing hard to make this extension part of the must-pass government funding, tying subsidy extensions to broader funding bills to avoid letting them lapse. But as always, there are disagreements on terms, such as cost, eligibility thresholds, whether to include policy riders, and how to pay for it. On one side, Republicans are concerned about the cost and potential fraud, whereas Democrats are arguing the human cost of letting these subsidies lapse. Now, we do try not to get too political on this channel. However, it does seem that politics and healthcare are inextricably linked. So if you have thoughts, questions, comments, please let us know in the comments below. Of course, if you have questions about a marketplace plan or health insurance in general, you can reach us in the comments or at the number on the screen. We're licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. Now, also, I would like to mention that with these changes in marketplace plans, it may be that other, less traditional health insurance might be a better fit for your family. For example, short-term medical plans are having sort of a resurgence. They'll now be available for a period of up to 3 years, again, in most states. So if you'd like to learn more about that, I'll put a video at the end of today's video where you can learn more about short-term medical plans. These changes are coming at us very, very fast. So I highly recommend that you subscribe to stay up to date, and please make sure to like this video so that we can get this information out there. All right, let's get back to it. Now, with these enhanced premium tax credits set to expire, it's expected that this will affect certain groups of people and certain locations much more than others. For example, if you live in Minnesota, you can expect that this will affect you greatly. It's expected that premiums could jump from, on average, $326 per month to $503 per month. Some will lose all financial help entirely. In some states, they're expecting 50% increases. And of course, for middle-class families who might have just qualified for a premium tax credit under these enhanced premium tax credits, they may lose eligibility, making these plans completely unaffordable. Now, although the deadline is looming, the pressure is actually increasing on both sides of the aisle to extend these enhanced premium tax credits. So it is looking a little more likely that this may happen. For Democrats, letting the credits expire is risky. They may lose support from their constituents who'd face real pain if premiums rise sharply. Many Republicans are in extremely competitive districts and are pushing for at least a 1-year extension. Unfortunately, the cost and those proposed policy riders further complicate the issue, as well as getting bipartisan support with enough votes on each side to push this through. But as I mentioned, there is increased pressure coming from the states, insurers, and public testimony. And open enrollment is around the corner. Those plans will be available for preview soon, which will make people all too aware of what their new premium would be without that enhanced premium tax credit. Amplified voter concern could mean even more pressure, which would urge Congress to act. Now, what happens if these premium tax credits are not extended? Well, as I mentioned earlier, it is a vicious cycle. So, with the premium tax credits not extended, premium rates would increase significantly. Unfortunately, this would lead to many having to drop out of the marketplace. And those who are more likely to drop out are the younger, healthier individuals who are weighing their risk with the costs. That means that they will then be a much smaller, possibly sicker, older beneficiary pool, meaning higher costs to the insurers, not offset by a younger, healthier population, which means they need to pad their bottom line somehow, which means further rising premium costs. And the cycle goes on and on and on. Additionally, if these enhanced premium tax credits are not extended, there will likely be political backlash as well. So if you rely on a marketplace plan for insurance, here's what you need to know. Make sure to stay up to date about any changes regarding these premium tax credits and their possible extension. Also, make an appointment with a broker as soon as possible. You may need more help than ever before navigating healthcare this year. Also, if you can, you might want to set aside additional amounts for your monthly budget for your monthly premiums. If this isn't going to work for you, you may need to consider alternative options. For example, short-term medical plans, private insurance, catastrophic coverage, hospital indemnity plans, critical illness plans, or a high deductible health plan with hopefully a much lower monthly premium that will offer you an HSA as an additional way to save money. If you have questions, you can reach us in the comments below or at the number on the screen. As I mentioned, we are licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. If you want to learn more about those short-term medical plans that I mentioned earlier in the video, make sure to check out this video over here. Or of course, if you'd like to learn more about marketplace plans in general, make sure to check out our marketplace plan playlist. Of course, please make sure to subscribe to stay up to date, and make sure to like this video so we can get this information out there. As always, thank you so much for watching and have a wonderful day. Bye-bye.